What is going on, guys, and welcome back to another very exciting video. In this video, we are going to be going over Meta stock, and Meta is a very interesting play right now. We can see that the stock was down 4.5% here today, but overall in the last few months, it's been going up in a very massive way. So what we are going to do in this video is we are going to take a look at what it would take from Meta for the stock to reach $400. And there's a lot of interesting news going on with layoffs, cost cutting. This is proclaimed the year of efficiency by Mark Zuckerberg. So what we're going to do is we're going to take a look at what all that means for the stock going forward and how the stock could reach a price target of $400. So if you enjoyed the video, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. As I mentioned in the intro, the stock here today is down over 4.5%. Over the last 5 days, it is up almost 10%. Over the last month, up almost 14%. And over the last 6 months, it is up 32%. And that is not even from the lows back in November. From the lows in November of around $88, we can see that the stock is up a whopping 120%. And when we take a look at Meta's valuation, we can see that it has been all over the place over the last year. Around a year ago, it was trading at a 23.31 forward P ratio. In September, it traded all the way down to an 11.31 forward P ratio. And that is not even the low of $88. We saw the low of $88 in November. And around that time period, it was actually sub 10 for a forward P ratio. Currently, it is traded up, however, and it is trading at a 18.94 forward P ratio. And when we take a look at Meta's valuation over the last 5 years, we could see that over the last year, it's traded around a 15 forward P ratio. And that relative to where it's traded over the past couple years is actually a deep discount. The only other time we've seen Meta drop below a 20 P ratio is here in 2018. And remember, in 2018, we had two major things going on. The first was the trade war with China, and the second was the US government was looking into Meta and questioning its overall security of user information. So there were a lot of headwinds at that time around Meta, but since then we saw the stock trade up all the way to a 32 forward P ratio and then down to around a 23. And then over the last couple of years, it's really leveled off around a 30 to 25 forward P ratio. And when we take a look at anticipated EPS for Meta over the next couple of years, we see that there are 50 analysts on Yahoo Finance covering the stock for 2023, and there are 46 covering it for 2024. And they have an average estimate of $9.69 for 2023 and $11.83 for 2024. The low estimate is $6.65 for this year and $8.06 for next year. And then they have a high estimate, which is where things get very interesting, of $13.68 for 2023 and $16.21 for 2024. So again, those high estimates are if the stock executes at a very high level over the next couple of years. So let's go ahead and take a look at what those earnings could mean for the stock price over the next year. So what we see here is earnings projected. So we have the average estimate of $9.69. We have the low estimate of $6.65, and then the high estimate of $13.68. And then we have calculated the forward PE ratio, which is just the current price divided by the potential earnings. So based off this earnings of $9.69, we have a forward PE ratio of 20.19. For the low estimate, we are sitting at a forward PE of 29.42. And then for the high estimate of earnings, we are sitting at a forward PE of 14.30. And then as we discussed, Meta seems to trade somewhere between a 25 and 30 forward PE ratio. That seems to be a fair valuation for it. So when we take a look at their current PE ratio, we can see that it is a 20.19 based off the average estimate for earnings. And then what we can do from there is do a quick ratio and come up with a price target. So all we are doing is we are taking the current price, multiplying it by the potential PE ratio and dividing it by the current PE ratio. And what that gets us is a $242.25 price target, which is almost a 24% return from the current stock price. And then when we look at a 30 forward P ratio, we actually see that the stock would trade all the way up to $290.70, which would be almost a 50% return from the current stock price. So when we take a look at the low estimate for EPS, we see that the stock would be trading at a 29.42 forward P ratio. And again, we are saying that a fair valuation is somewhere between a 25 and a 30. So if we trade down to a 25 forward P ratio, we would actually see the stock fall to $166.25, which would be a 15% loss. And then if we saw the stock trade up to a 30 forward P ratio, we would see the stock actually trade up to $199.50, which is basically break even at only a 2% gain. In my opinion, this is a very unrealistic number. I don't think that they will only earn $6.65. I think the only way they really do that is if they start dumping money into maybe the metaverse or some other investments, and obviously that could potentially hurt their EPS. Things start getting very, very interesting when you look at their high estimate for EPS. So the high estimate, if you remember, was $13.68. And when we look at what that means for the forward P ratio, that takes it all the way down to a 14.30. And what that means is basically Meta would have to trade up quite a bit to get to a 25 or a 30 forward P ratio. And what that would do to the stock price is the stock would shoot all the way up to $342 to $410, which would be anywhere from a 75 to 110% return from the current stock price. And if you remember, those are only the numbers for 2023. If we actually look at the numbers for 2024, we could see that the high estimate for 2024 is $16.21. And what that means, if we plug that in over here, is that Meta is currently trading at a 12.07 forward P ratio. And again, if we want to see it trade up to a 25 to a 30, we're saying that's a fair valuation. We would actually see the stock trade anywhere from $405 to $486, which would be around a 110% return to 150% return from the current stock price. And if you're sitting there asking yourself, how does Meta actually hit some of these numbers? One of the ways that they will do it is through share buybacks. So they increased their share purchase authorization by $40 billion. So that is a large amount of money and a large amount of shares that they can pull off the market. And keep in mind that basically what's going on through share buybacks is the company is buying back its own shares. So it is reducing the number of shares outstanding. And what that does is it lowers the denominator in that equation. So when you're talking about the equation of earnings per share, you are decreasing the number of shares outstanding. So the amount of earnings per the shares that are left over out there will increase. And that is basically just increasing your overall ownership within the company. And when you look at Meta over the last year, you can see that they have aggressively been reducing the number of shares outstanding. At the start of 2022, they were sitting around 2.859 billion shares outstanding. And by the end of 2022, they were sitting at 2.702 billion shares outstanding. And the second way that Meta will really get to these EPS numbers is through cost cutting. And sadly, one of the ways that they will cost cut is by layoffs. And this has been one of the problems within the industry over the last couple of years is a lot of these companies in tech have overhired. We've seen it from Google, we've seen it from Amazon, and we have also seen it from Meta. They have been the big three offenders. And really what that is coming down the pipeline now is it's coming back to bite them as they're having to lay off some of these employees to keep their EPS numbers in line and really help increase their EPS over the next couple of years. Mark Zuckerberg has really focused on pitching 2023 as the year of efficiency. And one of the ways he plans on also doing that is by cutting projects that aren't performing and may no longer be critical to the business. And that is a good way of looking at it. So any project that really does not align with the long-term vision of where Meta is headed, he's looking at reducing those teams and basically not hiring as rapidly as they have over the past couple of years. And then he's also looking at removing layers of middle management to make faster decisions. So when you have less managers, again, those people you don't have to compensate because there are less people kind of bogging down the system. You can also make decisions quicker and really execute at a lot faster pace. Full disclosure, I do own Meta stock and I like it for the long term. I think that $400 is really not out of the realm of possibility. When we look a year and a half ago, we can see that the stock hit $380 and really $400 is not a whole lot higher than that. We have seen the stock really develop over the last couple of years and look at a lot of different technologies, and they're starting to compete in a different kind of realm. They're focusing on their hardware business, and I think long term that is going to have a big impact on the overall company. So again, just keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research before you invest in these companies. Make sure they are right for your time horizon, for your portfolio, and really your overall risk tolerance as well, because Meta is a stock that does, out of big tech, generally have a little bit more risk and volatility associated with it. So overall, I hope you did enjoy the video. If you did, make sure you drop a like down below. And if you want to see more videos like this one, make sure you hit that sub button. And as always, guys, have a wonderful rest of your day.